All right, let's talk about prepayment privileges. Jim Seacott here with Polaris Mortgage Planners at Axiom Mortgage Solutions. Prepayment privileges are privileges that the lenders allow you to prepay a little bit of that mortgage every year without incurring any kind of penalty. So if you pay off a penalty, if it's a closed mortgage, a closed term, so you might have a 5-year fixed closed term or a 5-year variable closed term or 4-year, 3-year, what have you. If you pay off that mortgage completely, let's say you sell the place or you come into an inheritance or win the lottery, and you have this money, you pay off this mortgage completely, well, they're expecting you to pay, let's say we're dealing with a 5-year fixed, and you're expected to pay, you're at 2.89% on a 5-year fixed. So that payment, they're expecting 2.89 for 5 years, and let's say 2 years in, of the 5-year, you pay off that whole mortgage. Well, they're now missing out on 3 years of 2.89%. So they'll look at their 3-year rate at that time and see what their rate is. And if it's lower, then they're missing out on that money. So let's say it was 2%. They're missing out on 0.89 for 3 years. And they're going to look at your balance and go, okay, how much are we missing out on for interest over those 3 years? And if that's higher than a 3-month interest penalty, then they would charge you that. And that's called an interest rate differential. And that's for, on a fixed term, they will charge you that or a 3-month interest penalty. On a variable, they can only charge you the 3-month interest penalty. That's it. So when we're talking about prepayment privileges, they allow you to prepay some without causing any of these penalties. So they're saying, you know what, if you want, you can pay some money. And a lot of them are either 10 or 15 or 20%. So it could be 20% lump sum, it could be 15% or 10%. And a lot of them are two things. They're a lump sum that you can do every year, or you can do it in increments over the year, as long as it doesn't add up to more than that total for the year. And you can also increase your payment usually by that same amount every year. So let's say it's a 15% lump sum and a 15% increased payment. So if you had a payment of $1,500 a year, you can increase that payment by 15% each year, and make that higher payment and not incur any kind of penalty, prepayment penalty. With a lump sum, you can pay 15% of the original mortgage balance every year to pay it off faster without incurring any penalty. And you can match up both these together. You can do both, the lump sum and increase the payment. And then the odd one on fixed mortgages, there's a few lenders that let you even double up every mortgage payment as well. So you can really pay these things off fast without incurring any prepayment penalties. So how do we, the way I look at it is, if I know a client's looking to buy maybe some rental properties in the future, I would say take advantage of the lump sum stuff first, because if you increase your payment, now we have to use that increased payment when we're qualifying you for another property. We have to put that increased payment on your debt servicing for your current property. And so it'll lower your buying power on your next property that you're buying, if you're keeping this one, right? So if you're buying a rental property, you're turning this one into a rental, and you're buying a new home, this higher payment is going to hurt you a bit. So if you want to take advantage of the lump sum first and just make regular extra payments every month, maybe extra, some of them have a minimum of like $100 or maybe $500, what have you, on every extra payment. So maybe just do an automatic payment into an account, and then once you get to a certain amount, just put that onto the mortgage, and it all goes directly to principal, so it pays down your mortgage that much faster. If you're in a variable and variable rates go down, and you're in an adjustable rate where your payment actually drops, if you could just keep the payment at that same amount instead, and then all that extra, that your rate dropped, that extra payment now goes directly to principal. If you get a raise, maybe you want to increase your payment, then you can add that extra payment and increase your monthly payments or your regular payment to help pay it off faster. Another thing is, when interest rates start to climb, when I call every year, it can be a conversation where, hey, you have a 3% payment. Rates now are around 4%. this is what your payment would be if it was 4%. If you want, maybe start making that extra payment so that you get used to that higher payment. Because in 2 years from now, let's say it goes up again to like 5%, and then again you increase it that next year to 5, even though you don't have to, but you're starting to, that extra payment all goes to principal. But you're also getting used to that higher payment so that when you come up for renewal, your renewal rate will be up around that higher rate now. So you're already kind of buffered and hedged that rate, and you're ready for it. And you've taken advantage of the extra prepayment privileges to pay off that mortgage faster in the meantime. So that's just some ways to manage your prepayment privileges and take advantage of that. All right, Jim Seacat here with Polaris Mortgage Planners at Axiom Mortgage Solutions. If you have any questions, let me know. Have a great day.